Welcome everybody. Have you heard of Airtel? Have you heard of BSNL? Have you heard of Geo? Have you heard of VI? You may be thinking, sir, why you are talking about all this in income tax? Because the section which we are going to discuss about, that is amortization of telecom license. Section 35 ABB talks about these companies only, these organizations only. So basically, if we have to connect over a call from this place, I am calling you, you are receiving my call. That means we are connecting over a telecommunication network. Suppose I am using some internet, we are connecting through something called as a spectrum. And for these telecommunications under section 35 ABB, and for spectrum, which is mentioned at the end of this page under section 35 ABA, the companies have to pay a specified amount of money to government for buying the spectrum, for buying the telecommunications license. Now, whatever these companies pay to government, that is allowed as deduction under these sections. Okay? So, let's understand. Now, we are talking about telecommunication organizations like Airtel, Geo, BSNL, VI, right? So, it can be run by an individual or by a company, doesn't matter, because this section applies to all SSCs. But 4 conditions are required to be satisfied, or I can say 3 conditions. First condition is there must be a capital expenditure. That capital expenditure is license fees paid to government basically. Okay. The capital expenditure may be incurred before commencement of the license or after commencement of the license. So what I said, this amount, right, what we are talking about can be incurred, right, by the company before commencement of the license or after commencement of the license. Right? First point is clear. What is the first point? That there must be a capital expenditure. Right? Second point may be incurred before commencement or after commencement. Third point, yes, it should be actually paid. So if these 3 conditions are satisfied, what are the 3 conditions? Come on, excellent. You are able to understand. That's the great part of it. First thing, capital expenditure. So basically, company paid to government license fees for telecommunications or spectrum. These are capitals. It is actually paid. It's not due. It's actually paid. Second point is clear. Third, it may be paid before commencement or after commencement or even at the time of commencement. It's okay. It's paid. That's important. Now, here under this section, we get deduction for capital expenditure. That means for revenue expenditure, no deduction under this section. Okay. But what about revenue expenditure? Under section 37, you can claim deduction, right? So for revenue expenditure, under section 37, you can claim deduction. Okay. That's it. Next point. We have to understand that you have to get the deduction. So, we studied in 11th class accounting, or if you did not study commerce in your 11th, 12th class, in CMA Inter Accounts also you would have studied that we provide depreciation. Under which method we provide depreciation? First method which we study is straight line method, fixed installment method, correct? So, similarly, deduction is provided under this section. So whatever license period is there, you purchase the license for suppose 10 years. So for 10 years you purchase the license. So whatever license fee is paid divided by 10, you will get the deduction each year. Okay. So suppose you paid 10 lakhs rupees to get the license and it's for 10 years. So every year 1 lakh, 1 lakh, 1 lakh, like that you will get the deduction. Like this you should be able to understand. So we have to decide what is the period for which you will get deduction. Now, when you see the notes, start period is given later on and end period is given earlier. So license period ends with the end of license. The license period ends with the period in which the license expired. Okay. And license period starts if suppose you made the payment before the commencement of your license period. Then definitely from the day when the license starts, from that day or that year, we can use the word, that year is right. From that year, the period should be counted. Suppose example, after commencement of license, you made the payment. Then obviously the year in which you made the payment, from that period, the license period or the period of deduction under section 35 ABB starts. Okay. This way you should be able to understand. So what we discussed. So what is the start period? Let's simply remember in a very casual way I tell. Therefore, date of payment or date of commencement of license, whichever is later. This is the start period. Okay. Date of payment, date of commencement of license, whichever is later. This is the start period. And what is the end period? End period is expiry of license. Right? Once you decide this period, then accordingly, whatever amount paid divided by the period, you will get the deduction for that many number of years. Okay? This is how you should be able to understand the topic. Now, let's go to the next topic. You understood the period. You would have seen in other case like that in the notes. Sometimes the payment may happen in installments also, correct? So for each installment, you fix a separate period. What's wrong in it? So this way you should be able to understand. So what did you learn in the whole discussion what I did till now? First thing, this section 35 ABB talks about amortization of telecom license. Similar section is 35 ABA, amortization of spectrum. Right? Spectrum is internet, telecommunications license is call. Okay. Applicable to all assessees. It should be a capital expenditure. Basically, license fees paid to government. It should be actually paid, then only you claim deduction. And third point is payment can be before commencement or after commencement. Revenue expenditure is not counted. Okay. Revenue expenditure is allowed as deduction under section 37. Done. Now, when we talk about deduction, the date of payment or date of commencement of license, whichever is later, is the start period. And what is the end period? The end of license is the end period. Okay. Now, during this period, you have to give deduction of the actual payment made on the basis of fixed installment method, straight line method, in equal installments. That's you should remember. Right? Payments can be in multiples, right? Multiple installments. Then multiple periods can also be decided based on payment. Okay, done. Now, because you are getting the deduction of capital expenditure under this section, then obviously you will not get deduction under section 32. So because you are claiming deduction here, correct? License is an intangible right which you got. So basically intangible asset is also a depreciable asset, right? But here you will not get depreciation under section 32 because you are getting deduction under this section. Okay, under 35 ABP. Now, let's continue. Suppose example, some situation comes like the Geo wave came. A Uninor was there, Telenor was there, Docomo was there. They sold their license to some other company and they vanished from the market. So in this type of situation, when they sold the license, how the treatment should be? The answer is pretty simple. It is same like a power unit. It is same like a power unit. It is same like a power unit. It's same like what? Power unit. Suppose you sold the entire license for less than the WDV, less than the balance in the block. Then please remember that it is a loss. It's a business loss. But if you sold more than the WDV, then sale value up to original cost will be your business income. Sale value more than original cost is your capital gain income. In short, I said you should be able to remember, right? In terminal depreciation, we already practice in numericals also. So you have confidence and understanding. That's what I believe. Same like that. Okay. Suppose example, if you sold the part of the license and sale value is more than WDV or sometimes more than original cost, then it should be treated same way, right? Like we discussed in the power units, right? That terminal depreciation balancing chart, same treatment. But suppose example, if the sale value is less than WDV, sale value is less than WDV, then what to do? In that case, because you only sold the part of the block, so balance value whatever comes should be allowed as depreciation or should be allowed as deduction over the balance period. This way you should be able to understand. Okay, great. Shall we continue with the story? Again repeating how the sale and capital gain should be treated. Both I am discussing together. Please remember, if the entire license is sold, there is a different treatment. If part of the license is sold, there is a different treatment. There are three terms to remember. One is WDV, that is balance. One is original cost, the purchase price. And third is sale price. Okay, three things are there. Okay. If suppose you sold for less than the WDV, the balance, then you are doing loss. You sold the whole license for loss. It's a business loss. You sold more than WDV up to original cost. If the sale price is, that is business income. More than original cost, whatever sale price is there, excess of sale price over original cost, that is capital gain income. But suppose if you sold the part block and it is a case of income, right? More than WDV, the sale price. Sale price is more than WDV or more than original cost. In that case, obviously you should remember that it would be treated same like power units. But if you sold for less than WDV, then it is not business loss because still part of the license is there. Na? Part license you sold. So still part is there. So that's why that balance part is allowed as deduction over the balance period. Okay? Right. Now, we understood entire sale. What happens in case of amalgamation? In case of amalgamation, the new company, that is amalgamated company. What I said in case of amalgamation, the new company, the amalgamated company, right? The new company, the amalgamated company will actually get the deduction. So I should understand, you should understand this topic. There are two types of company. One is amalgamating company, old company which is going to close down, and new company, that is amalgamated company which is going to survive for long period. So the amalgamated company will get the entire deduction. Suppose example, there is a case of demerger. Then the license is transferred to resulting company. Then the resulting company will claim the deduction for the balancing period, believing that the same company existed over the period. Okay? This way you should be able to understand the topic. So this is amortization of telecom license under section 35 ABB. Okay. Now let's go to the second topic. Amortization of preliminary expenses under section 35D. So when we talk about preliminary expenses under section 35D, this is applicable basically to whom? To only an Indian company or to a resident non-corporate assessee. To whom it is applicable? Is Indian company or a resident non-corporate assessee. So that means this amortization of preliminary expenses is not applicable to whom? Foreign company. Or if somebody is a non-resident non-corporate associate, them also it is not applicable. Sorry, we understood what is applicability. But do you know what is preliminary expenses? Shall I tell? There are 6 points which explain to you what is preliminary expenditure. So let's start. So basically preliminary expenses, they go if you want to start a new business. Now you will not abruptly start a business. You will do some market research. You will try to study that whether sales will happen, whether I'll become profitable in this business, whether I'll be able to sustain in this business, whether I'll be able to meet the capital needs for the business, whether I'll be able to get the licenses required for this business. All that studies you have to do, correct? So that is what a project report, a feasibility study, a market survey, engineering services related surveys, right, for the business will do. And this is what preliminary expenses. So before start of business, we will incur all this. Project report, feasibility report, market surveys, right? Engineering services in relation to business. This is preliminary expenses. Similarly, now, if you want to start a business, you have to enter into some contracts with people. So some contract drafting is required. Contracts are required to setting up the business or conduct of the business. Suppose tomorrow I want to start a college, I have to sign a contract with interior designers, correct? How the interior should look for the whole college. It's important, correct? So interior designing is required. Similarly, I have to go and get the license from the respective university or respective institution for setting up the college. Maybe fire safety related certificates also I require. Building is useful or usable for conducting a college, such type of license also I require from the agency. So many licenses I require. So for that, some agency, some concern, or myself, if I am the owner, I myself can do this. For that, contract drafting is to be done. Right? So basically, I said that feasibility report, project report, market survey, engineering services, right? These type of expenditures are preliminary expenditure. This preliminary expenditure may be incurred by the assessee himself, or he may engage some concern to do all these things, and for that concern he may pay. Sometimes contract drafting is required for setting up the business or conduct of the business. Memorandum and articles of a company have to be drafted. For that, we may have to do some payment to a lawyer or to a chartered accountant or a cost accountant. Right? Sometimes we have to actually pay money to the Ministry of Corporate Affairs for registration of companies. So that is also preliminary expenditure. Right? Suppose you are a public company, you have to issue prospectus, you have to sign contracts with underwriters, you have to pay them some commission, you may ask some brokers to sell the shares, right? Like you would have seen that Zomato's IPO has come, Physics Wala is going to bring a new IPO, right? Nyka's IPO was super successful, Like that, you would have heard so many news. Now, if IPO comes, if they have to sell the shares, is it possible that they can reach to so much of public? It is not possible. Then they sign up with companies like Zerodha, right? Zerodha is there, angel broking firms are there. So they sign contract with these people and they give commission to these organizations. Kotak Securities, HDFC Securities. So they sign contracts with these people. These people have vast database of people who are into investment. So they'll ask the people to do investment. And these people get commission from that issue, public issue. So whatever underwriting commission, brokerage commission, printing, drafting expenditure for prospectors, right? Or lastly, I'll tell you, this is in case of public company, please remember. And lastly, any other prescribed fees. These are all preliminary expenditure. So what I said till now, please remember that preliminary expenses, 6 items are there. First is feasibility, project report, feasibility report, project report, market surveys, right? And there can be last one which we have to study, engineering services, right? Then registration fees for incorporation of a company, right? Then we have to discuss about something called as drafting of memorandum and articles, IPO related expenditures like underwriting commission, brokerage, right? Drafting of contracts for setting up the business. Like that, we discuss so many things, or any other prescribed fees is your preliminary expenditure. Now, you incur this preliminary expenditure. So incurring the preliminary expenditure is important. Why we should incur it? For setting up a new undertaking or commencement of a new business, or already the undertaking is set up, you want to enhance it, expand it. And lastly, I'll tell you that enhancement is there. Or sometimes you may set up a new branch, new unit. So expenditure may be incurred for this purpose, right? It can be setting up a new undertaking, enhancement of the same undertaking, commencement of a business, or setting up a branch, that is unit or a department. For that, preliminary expenditures must be incurred. Now, if it is a company, obviously chartered accountants will do the audit. That report is enough. That audit is enough. But if you are a non-corporate assessee, then you have to get your report from a chartered accountant at least 1 month before filing the returns. You should submit the report to the income tax department that okay, these are the preliminary expenditures incurred and we are claiming the expenditure and this is genuine. Who should certify? Chartered accountant should certify. Suppose it is a company assessee, then in the audit itself he will do it. But because it's not an audit assessee, then a separate report is required for non-corporate assessee. Now, we understood what is preliminary expenditure. We understood that this section will give you deduction only for Indian companies or resident non-corporate assessee. We discussed that preliminary expenditure must be incurred. We understood the purpose, right? It is to start a new business or set up a new undertaking or expand the existing undertaking or set up a new unit. We understood that after incurring the preliminary expenditure, report from a CA at least 1 month before filing return should be submitted by a non-corporate assessee. Okay, but how much deduction we'll get? Here I'll tell you 3-step formula. Please remember 3 steps. First, compute your preliminary expenditure, which we already did. So these are the 6 items which we call it as preliminary expenses. Do the total and you got the first step right. That okay, we computed preliminary expenditure. Then do the second step. That is now I am going to teach you. That is maximum deduction under this section. So suppose you are a non-corporate assessee. 5% of the cost of the project. Right? If you are a non-corporate assessee, 5% of the cost of the project. If you are a corporate assessee, then 5, oh, I am wrong. I have to cross check. Let me repeat again for all of you. If you are a non-corporate assessee, 5% of the cost of the project. That's it. So if you are a corporate assessee, then 5% of cost of project or 5% of capital employed, whichever is higher. Right? In case of company, 5% of cost of project, 5% of cost capital employed, whichever is higher should be considered. Whichever is higher should be considered. Okay? This way you should be able to remember the topic. Now you got step 1, that is what is preliminary expenditures. You got step 2, that is maximum deduction which is allowed. Now you tell me how much deduction you will get. Either your preliminary expenses or the maximum amount which we decided, whichever is lower, you will get the deduction. Correct? But this deduction is not given in 1 year. It is given in 5 different years, in 5 equal installments. So whatever the deduction, actual preliminary expenditure or maximum deduction, whichever is lower is allowed as deduction. That too in 5 equal installments. Okay. Now, from which date? Obviously, the deduction is given from the date of commencement of the business. If it is relating to commencement of business, if it is relating to setup of an undertaking, from the date of setup of an undertaking, right? If it is relating to setup of a unit in an undertaking, then obviously from the date of setting up that unit in the undertaking. Suppose if it is in relation to enhancement of the undertaking, then obviously from the year in which the enhancement of the undertaking happens, you will get the deduction. From that financial year, you will get the deduction. For how many years? 5 years, you will get the deduction. Okay, in 5 equal installment. Now, 2 terms we should understand. Very easy. What is cost of the project? Please remember, cost of project is cost of fixed assets. Whether it is land, whether it is building, whether it is furniture, whether it is fixtures, right? This is cost of the project. And what is capital employed? Capital employed is your share capital, your debentures, right? Your long-term loans. This is capital employed. Okay, clear? Now, for new business and for old business, what is the difference? New business, it is first year, correct? So whatever assets are there on the 31st March of the first year in the balance sheet, that we'll consider. Right? That capital employed items we'll consider. If it is existing business, then what happens? Already last year there was some assets. Now new assets are added. So whatever the newly added are there, that only will be considered. That's what they said. Okay. So this is how you should understand the topic. So when we spoke about amortization of preliminary expenses, we discussed in section 35D. Applicable to Indian companies, resident, non-corporate assessee. Preliminary expenses, step 1 we discussed. How to compute feasible project report, feasibility report, market surveys, engineering services related expenditure, registration fees, drafting expenditure of a contract, drafting of memorandum and articles of association, we discussed it, right? We also discussed it, right? Other prescribed expenditures or public issue related expenditures like underwriting, commission, brokerage, all this total. Step 2 is the maximum deduction, right? Maximum deduction is 5% of cost of project, right? In case of non-corporate assessee, and for corporate, 5% of cost of project or 5% of capital employed, whichever is lower. And step 3 is step 1, step 2, whichever is lower divided by 5. So you will get deduction in 5 equal installments. Cost of project, we understood cost of fixed assets, and capital employed is share capital plus long-term loans, right? We discussed this also. Okay, debentures also we understood. So we understood this section completely.